The gold price has crossed a major milestone of $1,300 per ounce and experienced a nice uptrend of 8% last 3 months. So where is it headed next? Let's look at the fundamentals and technicals to find out. To understand the fundamentals of the gold market, you have to go back to your high school economics and look at the supply and demand of gold. From the demand side, we have gold use cases driving the demand. Gold is often used as jewelry, and cultures like China and India have a cultural value in gold. In fact, I got the chance to live and visit China and saw the cultural value in gold. When there is a newborn and when there is a wedding, I often saw exchange of gold as a gift. And gold has a special characteristic of being conductive and resistant to rust. So it's a high candidate to be used in the technology device such as smartphones. And gold has been shown to be hypoallergenic, which is why it's used for jewelry, but it's also used in the field of medicine. I actually have a gold tooth. It has been with me for over a decade and has shown no problem and is still with me today. From the investment vehicle perspective, it's also driving the demand because the gold investment has been proven to be a safe haven when there is a lot of uncertainty in the market. In the market outlook video that I published, I talked about the China trade deal as well as Brexit causing a lot of uncertainty in the market, and investors' capital has been flowing into the gold market because of the uncertainty. And on the last video up in the iLab, the true value of money, I talked about how central bank has been accruing a lot of gold. And central bank has the power to control supply and demand of the cash currency and has been targeting inflation about 2%. And they've been buying the hedge vehicle of gold should give you a lot of clues around what is the pressure of inflation looking into the market. So there's a rise in demand we saw in data from the World Gold Council. From the supply side, it's been relatively steady. When we talk about a gold supply and gold mining, people often think about engineers with a hard hat underground digging for gold, but it's more complicated than that. There's an exploration phase to look for gold, and there's a development phase and then production and operation phase, which takes about 10 to 20 years total on average, which means supply can't really rapidly increase because of the demand. And we're seeing right now there's a misgap in demand and supply, which is creating an upward pressure on the gold market price. So that's what we are looking at in the fundamentals. So let's dive into the technicals. You're looking at GLD ETF in a daily time frame. As you can see, the gold had a positive price action since August of last year. And the curves you're seeing are 4 different moving averages. The green moving average is a 20-day moving average, and the light blue is 50-day moving average, and the darker blue is 100. I want to highlight all 3 shorter time frame cross the red moving average, which is 200-day moving average. All 4 of these moving averages are often looked by traders and important to track as well. When 3 shorter time frame crosses the 200, often indicates a bull run. And we have seen that happen recently. And we expect that bull movement to continue for next 2 to 3 months, retesting the highs around 129. So from a technical perspective, we see a nice upward trend, which is expected to continue for next 2 to 3 months. Let's summarize the trade. Based on the fundamental and technical analysis of the gold market, we see an upward trend in the gold price action. Specifically for the GLD ETF, we see a potential long position with the stop loss at 122 and take profit at 129, which gives you a risk and reward ratio of 1.9 with a time frame of 2 to 3 months. Remember, this is just a trade view. Before you make your trade decision, do your own research and consult financial professionals to find out what's right for you. I hope you enjoyed this video and let us learn, analyze, and invest.